So I'm very excited to welcome Lobo Tiggre. He is a very well-known investor and analyst of all things markets. And are you the owner of The Independent Speculator?
I am creator, founder, owner, editor, chief bottle washer, whole nine yards.
Right, so you can find him at theindependentspeculator.com. So welcome, Lobo.
Thank you.
So this podcast, it's called The Early Stage Investor because we want to find assets that are undervalued in the early stages of a bull run, still have a lot of upside, but can give you that kind of multi-bagger return. So, I really want to pick your brain about that because, you seem to be very interested in finding undervalued assets as well. But which asset classes currently excite you the most for those multi-bagger returns? I mean, obviously physical metal, physical gold is a great investment, but you're not necessarily going to get those like 10x returns.
Well, actually, let me jump in and say I don't think of the physical metals as investments at all.
Mhm.
Those are my savings. I don't buy gold or silver because I think it's going to go higher. I buy it because it's gold or silver. And, whatever happens in the future, history tells us those things always have value. And it is a true story that I have been able to feed my family in case of dire emergency because I had that ultimate refuge there to fall back on. So that's why I buy the physical metals. As a speculator, they're not convenient vehicles, and it's painful to sell your beautiful coins because the price has gone up.
Yeah.
So yeah, I as a speculative investor, the related equities are where I go. The metals themselves, I accumulate. And it's literally my hope never to have to sell them unless, I can pass them on to posterity or there's some spectacular opportunity that would cause me to dip into savings. Other than that, I don't trade them. I accumulate.
Which kind of areas excite you the most right now? Which asset classes?
Sure. Well, this may not be what you want to hear, but I have to put it out there in terms of buy low, sell high opportunities. Hands down, the most interesting space. It's not silver. I love silver. It's the win-win-win metal for 2021. It's not silver. I got to say it's uranium. It's still hated. It's still, nobody wants to hear about it except for a few uranium bugs, and they're all excited. But it's one of those things where it's a Rick Rule test is passed, right? It's a when, not if question. You absolutely have to have it. It's not like the Mr. Fusion reactor on the back of the time machine in the Back to the Future movies. You can't put beer and banana peels in there and get energy out. It's got to be uranium for a nuclear power plant. Yes, we're going towards different kinds of plants in the future. We may even go completely non-nuclear in the future, but that takes decades. And the plants now need uranium. The plants being built now, and there are more of them being built than decommissioned. They all need uranium, no substitution. And you can't mine the stuff at the current price, not enough to matter. So wow. In terms of buy low, sell high, early stage opportunities, just hands down, uranium has the best setup of any metal or commodity I can think of.
Yeah, and before the call, you had mentioned that you've been doing this since 2004. So that means you were there for the 2011 bull run. What kind of parallels do you see today? Because that was obviously an incredible opportunity as well to be there in 2010. Do you kind of see the same bullish fundamentals now?
Well, let me segue and go back to what I was just saying. We don't have to talk uranium all day. Yeah. That was the answer to your question. But that actually happened first. The big spike in uranium prices was in 2006-07. Okay. So it was before the broader metals bull, and it was driven by market-specific circumstances, which actually I do see as similar today. Back then the Cigar Lake mine was shut down. It's been shut down now. So interesting parallels there. Yeah. And if you're looking for 10 baggers, and I promise I won't talk uranium all day, but if you're looking for 10 baggers, there were 10 baggers, there were literally 100 baggers. There was one stock that went up 17,000%, I remember, during that uranium run. So, and pardon the mandatory pun, but of course I see explosive upside in uranium. Just
right. Yes.
You just can't mine the stuff at current prices. It has to go up substantially. And the whole reason for speculating on the stocks rather than the metals is that they provide leverage to the underlying commodity. And we've seen this before. Uranium goes up sharply, and those stocks have the potential to do moonshots. I like to say potential because I don't want to come across as promising anything here.
Right.
But I will say I see that potential, and I am deploying my own money in this direction. The last stock I bought was a uranium stock, and I'm looking to add more.
Great. And, uranium, obviously the risk is some sort of Fukushima event again. If that were to happen, obviously I think stocks would take a dive. But given that there's a structural deficit, they're building new reactors, they need it. Regardless of that kind of negative PR, would you buy even more uranium on some sort of like dip like that?
Yeah, well, there's one caveat here is that a lot of the uranium stock, I'm not the only one saying this. I mean, it seemed like a couple of years ago, I was the lone wolf in the woods out there on the uranium story. But there are a lot more uranium bulls now. It's broadly still hated out there, but within the commodity sector, a lot of people get it. And it's kind of crazy. The uranium price has been, actually, it also bottomed years ago. It's been in a 5-year uptrend, but it's been a 2 steps forward, 1 step back, 2 steps forward, 1 step, very sharp sawtooth pattern.
Yep.
And it rallied last year again, in that pattern, but it's been correcting since. And over the last few months, uranium has been seriously going into reverse, and the stocks have been going up. And so that's the opposite of what I was saying about gold and silver stocks,
right,
where you see them being relatively cheaper, particularly in terms of the price of the metal. The stocks are in the uranium space have been relatively more expensive in terms of the underlying. Now you got uranium getting cheaper and the stocks getting more expensive. That's not a buy signal. That's a take profit signal. People hate it when I say this. But stressing again, takes profits. Taking profits doesn't mean you have to sell everything. I'm not telling anybody to dump uranium. I'm saying if uranium prices are going down and you got a triple or a quadruple on your uranium stock, there's nothing wrong with taking some money back off the table. As the saying goes, nobody goes broke taking profits. So this is the caveat here. I love the uranium space. I love the explosive potential in this space. But I'm not willing to chase stocks that have gone up just because of that. I want to look for ones that are still overlooked. If I can find one that I can believe in, that it has that value proposition. And that does take some due diligence, but there are some out there, as I say, that I've been willing to buy. And the good news for anybody that's new to this is that the sort of gravity has started to assert itself here. And a lot of the uranium stocks are correcting now. I do see that as an opportunity. I can't say go out and buy anything, right, because a lot of them are still not objectively cheap. So I see this as something, make your shopping list, look at these, set a target that you think is a good entry point, and you may well see it before uranium goes into its next 2 steps up kind of advance.
Absolutely. And so my question just relates to kind of an argument that I've heard recently about not being bullish on American uranium suppliers, without mentioning any names, but American uranium, because like the reserves in the United States are kind of low, the mines are all kind of, they're not exactly pumping out uranium and they're not super active. But then
they're not producing any. There's no real production. There's byproduct production.
Yeah, so you have big competitors with Canada and Kazakhstan, and it's like, why would the United States, they could get it cheap from those people, why would they invest in uranium in the United States? So it's like, I've heard just people being bearish on U.S. uranium producers. What is your take on that?
It's hard for me to imagine how those people could miss, the story of the year, or years really, has been the U.S. push on resource nationalism, on supporting U.S. producers. The whole Trump thing, the Section 232 petition, Trump's nuclear fuel working group, these things were disappointing, but they showed an awareness that, there's an issue of 20% of your electricity comes from nuclear power and you produce 0 uranium. And, you're dependent on the friendliness and greed of your Canadian and Kazakh friends, Australians too, and so on. The greed is more dependable than the love. And frankly, I'm not worried about Canada cutting off uranium to the United States or Australia. It's not like we only can buy from the Russians or the Kazakhs. I don't really, personally, I don't buy the national security argument here. But I do get that there's a disconnect here. And maybe not national security, but just sort of more supply chain security. It would be a good thing if there was some domestic supply. Now, here's what I think is the best news about all this. You could say, oh, well, that was all Trump. He didn't care about the environment. He was happy to see uranium mines everywhere. but Biden's green, and that would be bad. But actually, no. This is, I think, a really critical point. More and more climate change warriors are coming around to reconsidering nuclear power, especially the more extreme types who, there's a subset out there that thinks that we're all going to die if greenhouse emissions are not cut within, like, it was 12 years last year, I guess 11 now, whatever it is. Like, there's a cutoff coming within a dozen years that if we don't drastically reduce CO2 emissions in the near term, like, we're all going to die. There's people that really believe this.
Yeah.
If you believe that and you look at the CO2 reduction, it's not happening. It's not going to happen with solar farms and windmills, not on time. I mean, maybe in 50 years. But if you believe in this deadline, it's not happening without nuclear power. And so you have more and more of these people saying, well, it's a necessary evil, or let's reconsider, or these new, the small modular plants, advanced nuclear, let's reconsider this. And even, the Biden administration, you can't just say, oh, that was a Trump thing. The Biden administration has come out pro-nuclear, pro-US supplies of strategic and critical metals and commodities. And John Kerry, I forget what his title is, some grandiose big hat, ambassador for the environment or something. He's out there telling people that there's no choice. We need nuclear energy. There's a famous speech now he gave to a bunch of MIT engineers saying there is no alternative to nuclear. Go for it. Like, go build these plants, build us better ones, design better ones. We need nuclear energy. So if the most prominent and powerful voices in the climate change space now are turning pro-nuclear, I think that is a game changer. It's the U.S. has been hurting on this front and losing ground ever since 3 Mile Island, and this seems to be changing now. But regardless of that, the U.S. has established a new uranium reserve that was passed in Congress. And the new administration, the reports are they are proceeding with this. We haven't heard about it yet. So there's actually a specific reason to buy US produced or US focused uranium plays, because it appears that the government, which already has 75 million in funding for this, it's small potatoes, but it's a start, is going to be looking to buy pounds produced in the US. Wow. And that doesn't help your Kazakis or Canadians or anybody else. One final point. The Kazakis are the lowest cost producers in the world. They can make money on some of their mines at current prices. They're the only ones who can, but it's not enough to supply demand. They cannot single-handedly supply the needs of the nuclear industry. So yes, they are the lowest cost producer, but even they have voluntarily cut back a la OPEC, and they have COVID issues too. So I think it's incorrect to just point at Kazakhstan and say, oh, well, they can produce for $30, so the price doesn't have to go higher. I think that's incorrect. Mm-hmm. And it's incorrect to dismiss U.S. plays because there's no U.S. production. That's actually a reason why U.S. plays could attain a premium in the marketplace, because there's no U.S. production. And maybe it shouldn't be so, but markets do what they do, not what we think they should do. And sorry, the downside is, I always like to say, and I'm not a cheerleader, what could go wrong? If there's another Fukushima or something, absolutely, uranium will crater and the stocks will, they'll blow up. So it is not risk-free. So, right. But to address your 2010-11 situation, I think that's really, it's interesting. We are in uncharted waters. And I like to stress that, because you have all these gurus and experts out there saying, here's the chart, or or telling you what's going to be. Oh, the Fed has to do this, or there has to be deflation, or there have to be anything. We're in uncharted waters. But I see parallels. And what strikes me as particularly interesting to your question is, the setup for 2010, particularly precious metals, but broader commodities movement as well, was you had the great financial crisis, the crash of 2008, and the aftermath of that, lots of money printing. And you could say, well, we had this crash of 2020 with COVID, and we had money printing, so it's very similar. And broadly speaking, yeah, that's true. And it's an interesting parallel. But what happened after 2008 took years, right? 2008 to 2011, that's 3 years between that crash and the peak, at least for gold and silver, particularly gold in the fall of 2011. And we saw gold and silver just go screaming up within the same year, just within months after March, the crash last year, and the August peaks, just a few months. So I think this is important because if what we're experiencing now was just a different version and a faster version of what happened in in the Great Financial Crisis, the GFC, global financial crisis. If that's the case, then an argument could be made that it's peaked already, and that what happens next should just be downhill, and that you shouldn't be speculating in gold and silver stocks. That it's all been accelerated. It was an artificial, quick, sharp jab, and there's a quick recovery, and now it's going to be downhill from here. So if you believe that, you've got your marching orders. I don't believe that. I think that we were in a situation where we had started to see global monetary easing. I honestly believe that everything that's been done since the GFC, since 2008, has solved none of the problems. And that was starting to come unraveled before COVID came along. The famous Powell pivot in late 2018, right? We saw gold and silver really start to move up again after that, particularly gold. Silver lags as usual, but equities too. So you saw the world pivoting towards this more easy money stance, and that had clear and obvious implications. So what happened last year, I think, caused an acceleration. It maybe pulled forward some of that into 2020, and we've been digesting it ever since. But I don't think that was the peak. I don't think that was the top. I think to the degree that there was some pull forward, we still have the rest of what's coming. And what is coming? The money printing hasn't stopped. There's no reason right now to look at the global macro picture and say, gold and silver are done. Everything's under control. Everything's fine. The money printing has stopped. We're back to healthy. That's just not the world I see.
Right. And isn't that kind of what happened in 2011? Like that's what caused gold and silver to correct and just stay down for a few years and base. Was that, I guess, inflation expectations lowered and everyone thought the Fed had it under control. So that's what happened then. You're saying the same risk of that happening doesn't exist today.
To be fair, I didn't expect 2011 to be the end of that rally either. I got to be honest.
Yeah.
I did think it had risen too high too quickly. We were, back then, $1,000 gold was a good price. We thought 1,500 was like we'd be in heaven. Everybody be making so much money at 1,500. That was, if gold had risen to about that level and just stayed there for a while, we'd all be buying new houses, boats, helicopters, whatever, right? And it goes up to 1,900. So I do remember sounding cautionary notes, but I didn't really expect it to go in reverse because, yes, you're right. Expectations changed. Inflation did not explode the way we thought it would. But at that time, in 2011, at least hard money advocates like me, most of us thought that inflation would explode. And it's been, a bit of humble pie since 2011 that governments printed so much money. They tripled the money supply back then after the GFC, just in the US alone. Right. And the inflation didn't take off the way we thought. So could I be wrong this time? Sure, anybody can be wrong. But they tripled the money supply, and then things did cool off. And we're still in the sky's the limit. Go big or go home. The Fed is telling the administration and everybody in Congress who will listen that there's very little risk of overdoing it. It seems like Biden's taking Powell at his word, proposing a few trillion here, a few trillion more there. That hasn't stopped. So I still see the ski jump in front of us.
Yeah, exactly. And that's why, I agree. It did the 2011 and through 2018, I guess, basing pattern did put a damper on the rally. But that to me is exciting because that kind of just tightens the rubber band even more for the next.
Well, most people see this as a new cycle, but it's interesting that you put it that way.
Yeah.
If you look back sort of big picture and you look at what happened in the last really major precious metals bull in the 70s, there was this gigantic multi-year slump in the middle. And this one is, the initial rally was bigger. The whole thing is bigger. So to have a multi-year slump in the middle actually fits the last pattern that we saw.
Yeah,
Patterns don't prove anything. Just because something happened in the 70s, the world is different. Doesn't mean it has to happen now. But it is interesting
yeah,
that
exactly.
you could look at it that way, as everything we've seen since 2011, and the bottom was actually in 2015. 2018 with the Powell pivot is when things really started picking up. But the bottom was actually for precious metals was actually in late 2015,
Right.
and it does fit a pattern.
Yeah, and it washed out a lot of the tourists, right? Who
That's
who were just there for the quick jump, and that they didn't get it, they got hurt, so now they're really hating precious metals, and especially because they are underperforming right now the broader market, industrial metals, stocks. So that's why I like it, because the more hated it is, the better, right? And especially if there's good fundamentals behind it.
right. And so it it's good that you've done your homework. It's interesting how you phrase these questions. That's really telling. And one of the things to add on to what you're saying that I like to say is, you look at the prices and okay, you could say gold and silver are underperforming, but that's only if you look at the very short term time frame. Overall, if you look at multi-year, if you look at since the Powell pivot, all the they're all doing fine, and gold and silver are much higher than they were then. So
Yeah.
there's nothing wrong here. Some correction and consolidation is perfectly normal. But yes, if gold isn't going up, gold bugs aren't happy. A gold price at which gold miners make tons of money, which is the case right now. You're seeing not just last year when gold was at record all-time nominal highs, but this year you're seeing reports of record revenues, record bottom lines in some of these miners with the correction. So, there's nothing wrong with the metals right now unless you have this very narrow tunnel vision view of the markets. But fortunately for disciplined people, a lot of people do, and they make mistakes. What have you done for me lately? Oh, gold, I'm so disappointed. I'm selling gold. I think it's a huge mistake, but it's a predictable mistake, and that's something that more disciplined people can profit from. And the final, I think, keystone here is if you look at the prices of the companies, priced not in dollars, but in gold, they're really cheap. And I think that's how you should look at something like that. If you're looking at a gold producer or silver producer, I think it's highly relevant to look at the valuation in terms of what it's producing. And if the value of what it's producing has gone up and its share price is really not connected to that, when there's a difference between price and value, there's opportunity.
So you're seeing a lot of just big cash flow generation in these miners.
That's why I think it's important to have this idea, because if you look at just the price in dollars, okay, they may have backed off. They're not as high as they were when everybody's excited, but you can't say they're as cheap as they were a couple of years ago. And I understand that when you look at something and, okay, it's not $100 anymore, it's only 60 or 70, but it was 30 a couple of years ago. You may
Right.
think, okay, am I the sucker at the poker table here? And I get that. And that's why I'm saying this is a tool that helps, is to look at the prices of these things in terms of what they're producing. And you can see this divergence between price and value there. And that gives me courage. I've been buying this year.
Yeah, for sure. On the dips, yeah. So I guess that leads me to the question of how are you kind of taking advantage of this opportunity? Because uranium has a lot of great fundamentals, as you mentioned, but so do precious metals. So do you have an allocation that you are sticking to, or is it if you see an opportunity, you go for it?
Yeah, I understand. And I have there's an essay on the website at Independent. Sorry, little promo here, but there's a lot of free stuff on the website, and if you search on various topics, you can find things. But some things are by title. And to answer your question, I wrote an essay a while ago. It's available for free. It's called "Adventures of Spreadsheet Guy," and there are a lot of people out there that want to come at this with this model in mind, and allocation models, or price predicting models for the commodities or for the companies, discounted cash flow models. Lots of models people want to bring to this. And that's somewhat relevant, I think, for the larger producers. But even they are so volatile. The prices of underlying commodities are volatile. So the performance of even the biggest and the best miners in the world can fluctuate dramatically from quarter to quarter. And it's the sort of thing that, just Graham Dodd type analysis doesn't apply to. I think I even remember somewhere in securities analysis, message Graham and Dodd saying this does not apply to highly speculative fields like commodity, speculation, right? So what I'm saying is, no, I don't have a portfolio allocation. I have a general sense. If I get, if suddenly my portfolio is full of uranium stocks and I don't have anything else, clearly I need to do something. But no, I'm not going to sell a stock because my uranium stocks have gone up and now that represents 40% and I only wanted 30%. That's a silly reason to sell. If they're going up, then I want to ride that wave.
Right.
So I think this is important because you come at this with a spreadsheet, I think you're going to make mistakes. And particularly for you and this audience, I presume, is in the wave with you, early stage. We're not looking at retirement income that gives us a little bit of dividends. It's very stable, low risk. Right. Personally, I'm still at the stage in my life where I'm looking for hockey sticks, right? I'm 10 baggers, there's a high risk reaching for 10 baggers all the time, but I'm looking for stocks that can give, rapid, high multiples. Yeah. And if I'm going to do that, I'm going to be embracing the most volatile part of the entirely volatile sector. And, to come at that with a spreadsheet, it's just, I think it's just silly. I'm happy just to get the direction right. And it's very Procrustean to say, oh, well, no, only this many explorers or only this many miners or only this much gold or the gold silver ratio is this. Therefore, the ratio of my portfolio should be inverse that. Whatever. It just, those things don't make sense to me. No, I don't have a formula. And final point, a really great speculation, one where you start researching it and you realize, holy cow, look at the value here. Like, how did the market miss this? When I get to that point where I've done enough due diligence to feel that this thing is real, and I find myself thinking, how did the market miss it? That's my sort of definition of a great speculation. If I see something that looks great, but the price is already high, maybe it'll keep going higher. The greater fool theory, that's not my favorite basis for speculation. I want to think, how did they miss this? And unless I've missed something, this is a great speculation. Those are so rare, right? If I've got more silver in my portfolio than I want, which I don't, I'm trying to add more silver, and I find a really great silver speculation, I'm not going to slam the door in its face and say, nah, go away, silver. I don't want to see you anymore. I've got too much silver. A great speculation deserves the red carpet any day. I can more broadly, early stage, I think early stage in terms of markets and commodities is great. Early stage in terms of companies is extremely high risk. So I will say instead of picking on company, I will say if you want early stage in the companies, almost the only way that I'll go there, early stage exploration, pre-discovery stock picks, is in the prospect generator business model. Pre-discovery, even with the best in the business, people who've made multiple discoveries in the past, set up a new company, you get excited. People, is a paramount variable in this space. There's no guarantee they're going to make another discovery, certainly not within a year or two, maybe not within several years, maybe not ever. Discovery is really hard. So the only way I'll go there for early stage speculation in metals and mining is if the risks, the very high risks of early stage exploration are offset with other people's money. I'm happy to spend other people's money, which is what the prospect generator business model does. You have these joint venture optionees. Yes, they get to earn the lion's share of the deposit, but they spend all the high risk dollars. And so your prospect generator can rip through dozens of prospects over the years without diluting shareholders or burning out the treasury. So I like that as an idea. The other sort of, it's not early stage, but early-ish is what I call success in progress. And if you search for success in progress on our website, you can see a free article on this too. And this is not pre-discovery. This is, after that initial discovery hole, and probably not even just after one hole, because sometimes you have a one-hit wonder. Sometimes they had the extreme bad luck of drilling right down some narrow pipe, right, of high grade. And it's like, wow, 100 meters of 10 grams per ton gold. That's fantastic. And then they drill around it and there's nothing, right? They just, right,
Yeah.
So now a lot of people don't like what I'm saying about success in progress. If you wait until you see, right, boom, 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 they keep hitting. This is real. There's something here. They have a model. It's predictive. They keep hitting it. This is success in progress. If you wait for that, you'll have given up those early stage gains, right? You're
Right.
not going to buy at pennies a stock like that. It's tens of cents or dollars even.
Mm.
But you've also just gotten rid of the risk, not all risk, but you've gotten rid of a huge amount of risk. So it's like, what would you rather have? A 1 in 1,000 chance of a 10 bagger, or a 1 in 5 chance of a 3, 4, 5 times multiple?
Yeah.
You know, I think, I'm willing to give up that potential 10 bagger for a 3, 4, 5 times multiple. And what I'm saying is basically, discovery is not a single drill hole event. Discovery is a process. And between that first drill hole and when you get into the boring engineering phase, you've drilled off a deposit, you have a 43-101 compliant resource or even reserve estimate, you've got feasibility studies. During that discovery process, there's a lot of value added. And there is uncertainty earlier on. So there's substantial gains are still possible early in that success in progress phase. It's one of my favorite ways of going in early on the exploration, and relatively early, not super early.
Yeah.
In the exploration phase.
Yeah, because the market's still pricing in risk, even if they just, let's say they just discovered a lot of gold. It's not going to fully price the asset, right? Because there's still a lot of risk to get that to market, right? So there's still
and there's technical risk. Like, it might actually be there, but it might turn out there's a lot of nasties in it, right? A lot of mercury and arsenic or something. Yeah. And it turns out that you need a really expensive roaster to get rid of it. And it's just not economic, even though it looks great. Or there was a silver play in Mexico. I won't name any names, but I remember when it was a big, exciting play. They got a partner to come in and spend the money, and it was going, the stock was going. And then they did metallurgy test, and it turned out like they could only recover like 20% of the silver or something. It was just an unusually difficult mineralization style.
Wow.
And you couldn't get silver out, and the stock fell off a cliff. So these things happen.
Yeah, absolutely. So are you primarily focused in silver, gold, and uranium, or are there other?
Those would be my three. Well, no, there's also copper. I'm actually quite bullish on copper now. I'm a little bit skittish about saying that because it's just kissed the all-time high yesterday, depending on which chart you look at. And it's that chart has gone vertical. If you look at the long-term copper price, it hasn't been in this high range for 10 years, and it's got there pretty quickly. And that always makes me, I am a bull, and the fundamentals here going forward, I think, are very, very strong. There are structural supply constraints for copper, and it's not just a fad metal. It's essential for industry, and you've got the post-COVID rebound coming. All the money printing is very bullish for all commodities, not just gold and silver. And then on top of that, you've got the EV story, right? You've got the new energy paradigm and how essential copper is, not just to the cars, but to the wiring, to the turbines, to the grid, to electrification is copper. You've got even the wrong way Corrigans of the commodity space, Goldman Sachs, people like that. They're calling the commodity super cycle. They're calling copper the new oil, that sort of thing. So I'm very bullish on copper, but I'm a speculator, not a gambler. I'm not just throwing darts at the board, and I'm not just chasing after the flavor of the day. I'm a value speculator, as crazy as that may sound. And that makes it difficult for me to go and buy, something that has just gone vertical. Yeah. Even if I'm bullish longer term, I'm more prone to look for a pullback and say, okay, let's see if there's some consolidation. There's a breather here. There was a little bit of a breather in recent weeks in copper, but you can barely see it on the chart. It's not a real correction in my view. So yeah, I would add copper. I would make it 4. In some ways, I see copper as the most durable and lowest risk. Like, there can be volatility along the way, but over the years and decades ahead, there's just no choice but to mine more copper, and that's got to be paid for. So I really like copper. It's the one I can worry about the least. Buy a great copper stock and not worry about it. But I see more upside on the monetary side for gold and silver.
You dropped some serious truth bombs on us. Where can people go to learn more from you and just get some of your due diligence?
Sure. Well, thank you for the invite. Very simple, independentspeculator.com. The main thing I would recommend is search around on the free content. There's an area called Speculators Digest. You can type in, keywords to search for. It's all free. And I put out a weekly edition of the Speculators Digest, which has links to that. And I promise if you sign up for this one, it's free. And I won't spam you. I don't send out a daily flood of advertisements. It's a weekly email. You get one email per week. And of course, I'll invite you to do business with me on my paid research, which is company specific. But you don't have to. And every bit helps. It helps me in the business to have a large audience. Companies pay more attention to me. They'll invite me onto their properties because I have a large audience. So the free audience is very important to me, and I don't mistreat them.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.